When we're breaking down a currency pair, right, we want to make sure that we are breaking that currency pair to the max. We want to make sure that we look at it from a technical perspective. We want to make sure that we're looking at it from a fundamental analysis perspective. We don't just want to be one dimensional. A lot of people, they kind of sleep on the fact that fundamentals really matter a lot. I trade GBP so I want to make sure that I know everything that is going on in the UK economy and everything that is also happening in the US economy. That way I have an insight of which one could possibly be going up and which one could be possibly going down. I want to have as much insight as possible and use the fundamentals to then apply it to my technicals. So without further ado, let's get straight to the video as we're going to be breaking down GBP and also a trade that I took at the end of the week. I'm going to break this picture down in a second because this all has to do with the GDP, not GBP, GDP, which stands for Gross Domestic Product. So it's a monetary measure of the market value of all the final goods and services produced in a specific time period. So this all has to do with the UK economy. As soon as the year started in February, actually, when, Q1, all of that other stuff started going on, it took a huge decline. And it's actually the lowest right here that the UK economy has been in a while. The Bank of England declared a recession, and they said that the pound could actually be looking at a 13% inflation rate. So let me break down to you guys what inflation rate is. Inflation is the rate at which the value of a currency is falling, which is what we have been seeing since the beginning of the year. The general level of prices for goods and services is rising. Rising prices lead the central bank to raise interest rates out of respect to the inflation containment mandate. So you see how all of this kind of plays a role. It's kind of like a domino effect. So when one thing is going up, they have to bring down another, and that is what they have to do. Interest rates are needed usually to combat inflation or refrain rapid economic growth, or both. Higher interest rates raise the value of a currency pair, which is why I am actually bullish on the GBP and bearish on the US dollar. If you're in a recession, you see a lot of people, they're not spending money. That's bad, because now that means that how is the government going to basically make up for all of that money? How are they going to be paying the debt? The country's debt. How are they going to do that, right? So when you have that problem happen, now that goes to show that they're going to have to go to the National Reserve to go ahead and print that money, because that money has to come from somewhere to cover for all these other costs. The governments make money by taxes, borrowing debt from other people. So the Inflation Reduction Act it's basically made to fight climate, health, and tax bill Congress just passed. So Congress just passed it. Biden has to basically pass it this week. So when you look at things like this, right, we're trying to actually fight inflation. And if you look at it from the technical analysis perspective, the DXY has been going down since the middle of July, has actually been going down. I don't know if this could be a pullback, but just the fact that this weekly trend line was just broken, it's kind of giving me a little bit of an indication that we actually might be trailing down. Okay, so let's get to it, right? I like this trade right here. So I'm gonna show you how this trade that I basically took. So this right here was the CPI news. The CPI news did this with the dollar because a lot of people were thinking, okay, we're gonna have the numbers are gonna be here, and it was just completely unexpected. It's not my time to trade. I actually like to trade breaks and structure. You guys know my strategy. So I'm gonna show you guys when I actually started to become interested in this trade. So, we see this, there's not really a lot of change, but I am looking for an opportunity, because as soon as I saw this candle right here, there's an imbalance right here down somewhere. Plus I got my psychological levels, the 121 area, my TP right there, which is where the structure ended up breaking. And I also have these equal lows, which I know at some point they're going to get taken out, but I'm not thinking about that. I'm just thinking about how I can get to this area right here. How can I sell it down, and when can I possibly sell it down to? So The perfect opportunity was on Friday at 2 a.m. in the morning when the news actually ended up coming out for, I believe it was the GDP the GDP numbers. And I was completely interested as soon as I saw this here. So we got the entire push to the upside. Then we dropped lower to this level. Still kind of like, because you never really know what could happen here. But when I see, man, when I see this setup right here and you break out of this level right here, I know you about to leave something down here. So this when I start digging, man. This when I start digging into the lower time frames, because now I'm going into the 15. Can I go to the 15? Yeah. The 15, right? Man. So you guys see now, right, how we pushed down, we pushed low, complete low, came up, down, broke out of it, because this is a breaking structure here now. And it never even came, it didn't even bother coming up here to fill that in to then continue to move to the downside. That was so that's when you guys end up seeing that line right there. So I actually have 2 points. I have this one right here. I had this one here, right? Which it could potentially come up to. So I got that line right there, and then I also had this line right here. So one of those two is actually going to end up being my entry. So it's just really now about just the waiting time. So I knew it was game time as soon as this low ended up being broken. Like, I already knew what type of time it was. And it's not even London session yet. Usually when the London session kicks in, it's usually like a sweep or just kind of like a little mitigation to then continue to the downside. It's Asia section. As you guys can see, look at this. This is the Asia section. The blue is the Asia section, and then the green is the London session. So what I did was that I just waited. I was like, you know what? I'm gonna just wait until it hit 2 or 3. And then what I did was I just set an order limit right around here. Now, I'm going to show you guys why my exit was over here. You guys see that big push, how it touched my psychological level of the 1.21 area. And then it broke down. And then after that, I just pushed all the way to the upside. I can't show you guys on the shorter time frames because I don't think that is going to actually let me. But besides that, I made sure that my TP was either here. My first TP was here, and my second TP was my other psychological level, which is the 1.21 area. So it was either here or here that it was going to end up at. It's only like what, like 25 pip difference. So it don't matter. I still caught the whole move. I'm going to show you guys the picture in a second. So here, man, look, bro, just look at how beautiful this trade was, man. Man, look at that. You see that sniper entry right there? Do you see that? Look at that. Done. 114 pips in the bag. And I call this on my Instagram. Man. This is insane, bro. This is insane, bro. Look at this. So you guys see, look, TP1 hit, then price retraced back, broke, came back, and then it ended up at the 121. And then, so I hope you guys enjoyed the video. I will definitely be posting more. If you guys want me to do any breakdown on any currency pairs that you guys want me to do, let me know. But without further ado, see y'all, man.